Have you ever wondered if the greatest investor existed in the Indian stock markets, what stocks would he pick? The question got us wondering about Warren Buffett too. Hence, we have created a list of Buffett's favorite type of stocks existing in the Indian stock market. In this video, we will cover the list of top moat companies in India, which is the Warren Buffett styles of stocks for investing. Keep watching. Before moving forward, if you are new to this channel, please subscribe and hit the bell icon because we consistently publish new and interesting stock market related videos. Now, first let us understand what are moats. The term moat was popularized by Warren Buffett in the world of investing. A simple dictionary definition of a moat would be a deep, wide ditch surrounding a castle or fort, typically filled with water and intended as a defense against attack. These moats were created in the medieval times in order to ensure that in the case of an attack, it would make it as hard as possible for the enemy to breach the castle. However, even modern companies have moat too in their businesses. Now picture the company as a castle and the attackers as the new entrants or competitors. Business moats are generally put up by the company as some sort of competitive advantage that would act as a barrier to the entry for new entrants. This could be in the form of brand entity, patents, size or market share, low production costs, etc. Warren Buffett has time and again expressed his love for these moat stocks. The most important thing is trying to find a business with a wide and long-lasting moat around it, protecting a terrific economic castle with an honest lord in charge of the castle. Warren Buffett. Top moat companies in India. Here we have compiled a list of moats existing in the Indian markets, possibly answering the question, if Warren Buffett participated in Indian markets, what stocks would he invest in? Number 1. Asian Paints. Asian Paints is one of the most obvious stocks in this list. The company was founded in 1942 and is engaged in manufacturing, selling and distribution of paints, coatings, products related to home decor, bath fittings and providing of related services. Over the years, the company was successful in converting the paints commodity into an Asian Paints brand. They currently are India's largest with a market share of almost 40%. It is also Asia's third largest paint company. In addition, the company has also maintained a good track record for consistent growth. 2. Sri Siemens. The next one in the list of the moat companies in India is Sri Siemens. The shares of Sri Siemens are one of the most expensive cement stocks in the world. The company was formed in 1979 and is currently one of the biggest cement manufacturers in the country. They recently joined an elite list of companies with rupees 1 trillion market cap. One of the biggest moats the company has set for itself has been the low production cost in the cement industry. The company has an EBITDA per ton of rupees 933, whereas the industry average stands at only rupees 692 per ton. 3. Tata Consultancy Services. Tata Consultancy Services (TCS) recently surpassed Accenture to become the world's largest IT firm by market cap. TCS is a subsidiary of Tata Group. The company is specialized in information technology, IT services and consulting. They currently operate in over 46 countries. One of the biggest advantages was being the first software and services company in India in 1968 and also being the first Indian software company to set up its operations in the United States. They were also the first Indian company to develop an offshore delivery model, giving them a cost edge. Apart from its size being a significant moat, they also benefit hugely from the switching costs their clients may face. They still benefit from the first mover advantage in the United States as 95% of the new businesses come from their existing clients. 4th. Avenue Supermarts. Avenue Supermarts Limited, better known as Dmart, is an Indian chain of hypermarkets founded by Radhakrishnan Damani in 2002. They are spread across the country with 234 stores as of 2021. Again, one of the biggest advantages the hypermarket has its size. This helped it set up a moat by providing one of the lowest costs to its consumers. Due to their size, they are able to generate huge volume of sales which allow them to negotiate the price of products at a cheaper rate from suppliers when buying in bulk. This results in products sold at a lower cost in their stores in comparison to their competitors. 5th. Titan Company. Titan has been one of the greatest wealth creators in the modern times. It is also responsible for creating a major chunk of the big bull Rakesh Jhunjhunwala's wealth. Titan, founded in 1984, is a part of the Tata Group. They are a lifestyle company engaged in the manufacture and sale of the fashion accessories such as watches, jewelry, and eyewear. They also introduced the Fastrack brand in the Indian markets and own over 60% of the domestic market share in the organized watch market. Titan is also the 5th largest watch manufacturer in the world. They sell jewelry through their Tanishq brand, which is the largest branded jewelry maker in the India. Titan's brands like Tanishq enjoy strong customer loyalty, giving them an added advantage over their competitors. 6th, Dr. Lal Path Labs. Dr. Lal Path Labs Limited was founded in 1949 by Dr. S.K. Lal. They perform diagnosis and testing on blood, urine, and other human body viscera. The company operates on a hub and spoke distribution model, which allows it to have greater flexibility and further extending its network. The company has over 200 clinical labs across the country with 2,569 patent service centers (PSC) and 6,426 pickup points (PUP). This model puts it at an advantage in comparison to other standalone chains. They also have a strong franchisee network, furthering their reach and at the same time reducing their capital expenditure. The company has achieved good growth over the years and at the same time maintaining good financials. 7th, Bajaj Finance. Bajaj Finance has been one of the greatest wealth creators in Indian market in the last decade. It also makes the most expensive NBFC stock. The company is a subsidiary of Bajaj Finserv and is one of the Moat companies in India. The company deals in consumer finance, wealth management and loans to SMEs. It has 294 consumer branches and 497 rural locations with over 33,000 distribution points. It has attractive car loans, housing loans, small business loans and other commercial loans products have helped it achieve a customer base of 34.5 million in 2019. One of the biggest loans has been cross-selling. Here Bajaj Finance has the ability to offer products to its existing customers. Cross-selling has helped it achieve to acquire 19.7 million customers. 8. Plite Industries. Founded in 1959, Plite Industries Limited is an Indian adhesive manufacturing company. Their brands include Fevicol, Fevikwik, Dr. Fixit, M-Seal, Acron, etc. Their leading brands has a 70% market share in the Indian adhesive and industrial chemical market. There are very little competitors can do when a company owns such a large portion of the market share. 9th, Maruti Suzuki. Maruti Suzuki Limited is the subsidiary of the Japanese auto manufacturer Suzuki Motors Corporation. The company has successfully maintained a market share of over 50% for many years now in the Indian markets. Other competitors have been able to do very little over the years to capture a significant portion in the automobile market. The runner-up, Hyundai, only holds a market share of around 17%. 10th, State Bank of India, SBI. The State Bank of India is India's largest public bank. The government-owned company holds a market share of 23% in terms of assets and 25% market share for total loans and deposits. SBI is the biggest bank in India in terms of the total assets. One of the biggest moat for the company has been the salary account being opened for all government employees. This also further allows them to cross-sell their products to their existing customer base. Another private equivalent to SBI has been HDFC Bank. Recently, Kotak Mahindra too signed an MOU with the Indian Army to handle their salary accounts. Closing thoughts. Investors like Warren Buffett make it seem too easy to find high-quality companies with wide moats, but identifying these moat companies before they erupt and buying them at a fair price is challenging. Companies with wide moat can provide huge returns to the shareholders in the long run, but it is very important to thoroughly research the stock before investing, as there are no guarantees. That's all for this video. We hope you have liked the list of the best moat companies in India. Do let us know which company you have invested or which you would like to invest in the comment section below. And in addition, if you have enjoyed the video, please hit the like button and subscribe to our YouTube channel. Have a great day and happy investing.